Alright, so I'm gonna run through with you the process of how you can look for these bounce setups daily. Alright, almost every single day you will have bounce setups. Alright, so the way I screen for them is I use a charting software known as TC2000, where you can go to tc2000.com. You can download the software. It's a subscription software that costs approximately about $300 to $400 US a year. Alright, so I'm gonna show you how you can use this software to screen for setups yourself. You can also subscribe to our alert service where we'll send you these alerts daily when the setups do present themselves. Alright, now, so let me show you the whole process. And the first thing you gotta do is to create what we call PCF scripts. And you create then easy scans based on those scripts. So first step is to create PCF scripts. So you go to library, and you click on library, you get conditions. Okay, click on conditions. And what you're going to do is you're going to create new condition formulas. So every time you click on this, you get what we call a PCF script, right? So you got to name the script and you got to put in the screening code. Now, all this has been done for you. You can download it on our site and you can copy and paste the PCF scripts. Now, how many scripts do you need? Well, I personally use about 6 scripts. Okay, so let me run through the 6 scripts with you, and we'll come back to this in a short while. Now, I've already pre-created the scripts, and they are all in here. So let me just find them for you. So the first one would be the 18 bounce long script with a confirmation candle. So basically, this would screen for trades that bounce off the 18 EMA with a confirmation candle. All right, long setup. And then you have got the 18 EMA short bounce confirmation. Okay, so those are, so you have 18 bounce long, 18 bounce short. All right, so these are the first 2 scripts. Next, you would have the 50 bounce long script with confirmation candle and the 50 bounce short script with confirmation candle. So these are the next 2 scripts, right? So 18 bounce long, 18 bounce short, 50 bounce long, 50 bounce short. And the last one I look at would be the 100, right? 100 bounce long with confirmation candle and 100 bounce short with confirmation candle, right? So altogether 6, right? So there are 6 scripts that you have to create, and once you create them, they'll be listed under your set of conditions. All right, so again, how do you create them? What you do is you go once again to library, you go to conditions, new condition formula. So the first one would be 18 bounce long with a confirmation candle, and you copy and paste the script that you can download from our site. Okay, now once you paste the script, what would it look like? It looks something like that. I've already done it, so let me show you what happens when it's done. That's right. So this is a script, right? So you paste the title and you paste this script that you can download from our site. So once you paste that, you click OK, and you will have that PCF script. Now, if you want to, for some reason, edit the code, you just click on Edit Formula, and you can change the formula here. Okay, so the first one is 18 bounce long with confirmation candle, right? The next thing would be to create the 18 bounce short with confirmation candle. And again, copy and paste the code. And once you paste it, oops, sorry, typo. Once you paste the code, you would have something like that, right? Now mine's already done, so it's over here. There we go. All right, 18 bounce short with confirmation candle. So again, 18 bounce long, 18 bounce short. What's next? That's right, the 50 bounce long and 50 bounce short, right? So go to new condition formula. Next one, 50 bounce long with confirmation candle. Copy and paste the script. You're done. Next, 50 bounce short with confirmation candle. Paste the script. Okay, you're done. So once you have done that, you would have it in here that should look something like that. That's the 50 bounce long with confirmation candle. And you have the 50 bounce short with confirmation candle over there. There you go, right? And finally, the 100 bounce long with confirmation and 100 bounce short with confirmation, yeah? So the first step is to create these condition formulas, or we call them PCF scripts. So again, you should have 6 of these scripts. Now, once you have created these scripts, step 2 is to create easy scans. So these easy scans will be based on the scripts and will use the same name or the same title name as the ones in the scripts. So again, how many easy scans do we have to create? Similarly, we have to create 6 scripts, right? 18 bounce long, 18 bounce short, 50 bounce long, 50 bounce short, 100 bounce long, 100 bounce short. Okay, so how do you create an easy scan? Click on easy scan, create new easy scan. And list to scan, we want to scan all US stocks, the entire range of US stocks. Okay. Next, add your condition, right? So the first condition would be the first PCF script, which is the 18 bounce long with confirmation candle. So click on that, 18 bounce long, and then you click save. Save the scan. So you're going to save it as 18 bounce long with confirmation candle and click save. So once you click save, it will be in your easy scan. All right, so I'm not going to click save because I already have it, right? So you're going to click save. Yeah. Now once you're done, next create the next easy scan, right? So click easy scan again, create new easy scan. Once again, list to scan all US stocks. Add the condition, this time 18 bounce short with confirmation candle. Okay, and then click save as 18 bounce short confirmation. Click save and it's there, right? So I'm not going to click it because I already have it. So once you have created the first 2 easy scans, next 2 would be, that's right, create new easy scan, list to scan once again US stocks, condition 50 bounce long with confirmation candle. Right, and then click save. Right, so you keep repeating the same process, right? 50 bounce long with confirmation. Save, that's it, right? So keep repeating the process till you've done all the 6 easy scans, right? So once you've done all the 6 easy scans, you can then use these easy scans to scan for trades every single day, right? So I'm going to show it to you in a short while how I use these easy scans. Alright, so now you've got the easy scan set up, you can begin screening for trades. So what I do every day before the market opens is to screen for potential setups. And I usually take a maximum of 2 trades a day. So before I start screening, I look at the overall market, right? So the first thing is I look at the S&P 500, you can look at the SPX, which is the S&P 500, and I'll just use my S&P trend layout. So to assess the overall market, again, I just use a few moving averages. I just use the 20 exponential moving average and the 50 moving average. That's about it, right? So I'm seeing currently that the S&P 500 is above the 20 exponential moving average, and the 20 EMA is still sloping up, okay? And again, the price is above the 50 moving average. So this tells me that the overall market, the S&P 500, is on an uptrend. It's on a short-term uptrend, it's on a medium-term uptrend. So because of that, I would tend to focus more on looking for long setups, all right? But if you go to a period, for example, when the S&P over here, for example, was below the 20 EMA, right? And the 20 EMA is below the 50 moving average. That is a confirmed downtrend, short-term downtrend. So over this period, I'll be looking more at short setups, okay? So given where we are now, we are bullish. The overall market is bullish, so I'm going to look more for long setups. So I'll go to my easy scan. Again, I can access easy scan over here or over here. All right, so the first thing I'm going to do is to look at my bounce setups for 18, 50, and 100. So let's begin with the 18. So I'm going to put 18. And there we are, 18 bounce long with confirmation candle. I'm going to click on that and let's see what happens. Okay, there's no setups today for 18 bounce long. Next, I'm going to go to 50, bounce long with confirmation, screening. Okay, so we've got 3 potential setups. Okay, now just because it comes out on the screen, it doesn't mean that I will necessarily take that setup, because I will look at a few other things which I'm going to show you to ensure it's a high quality setup that meets high probability setup criteria. Okay, so the first one is SB. So I'm going to click on that, and there we are. Okay, now I have to remember to go back to my bounce indicator settings, right? So for bounce, we have set up the charts. We have got our moving averages, 18, 50, 100, and 200 moving averages. We have got our 2 MACDs, MACD 50, 109, MACD 1859. Now recall that this MACD is only used for the 18 EMA bounce. For all other bounces, we can ignore this moving average, so I can just remove it for the time being, right? We also look at stochastics, right? We want stochastics to be oversold when we go long, overbought going short, right? Now, I will teach you this in the later part of this lesson, which is looking at the sector industry trend of this particular stock. But I'll talk a bit about it first, and I'm going to teach it more formally in the next part of this lesson, right? Okay, anyway, so let's look at SB and see if it meets our criteria. All right, okay, great. So SB is currently, let me draw for you here, okay? So you can see the price went up and it's bouncing off the 50 moving average, okay? With a bullish pin bar, okay? Now, well, again, there are a few reasons why I will not take this trade. First of all, notice that this reversal candle is not cutting through the moving average, right? So recall in our single and 2 candle reversal patterns, we want the reversal candle, the lower shadow, to cut through the moving average. So that's not happening over here. So that is one reason I will not take this trade. Another reason is you can see after this reversal candle, we have got a confirmation candle, right? That makes a higher high, higher low, and closes above the high of the reversal candle. Now, from experience, I can tell you that this confirmation candle is too big. It is too big. Now, what do I mean by too big? Now, usually, if the confirmation candle is more than 1.5 ATR, average true range, something you've learned initially, I find that it is too big, right? Why? Because now, if I were to take this trade, for example, I'll place my entry price above the high of this candle, right? Above the high of this confirmation candle, somewhere over there, right? And I'll place my stop loss at the low of the confirmation candle or at the low of the swing low candle, okay? So which means that I'm buying over here, that's my entry price, that's my stop loss. So this is what we call my 1 hour distance, right? My risk per share. Now, what happens when your 1 hour is too big? Right? When your 1 hour is too big, it is really difficult to hit 2 hour. Okay? So recall that to make it worth my while, it must hit at least 2 hour to get a 1:2 risk to return ratio. So when I lose 1. When I make 2. So when your 1 hour is too big, your 2 hour, it's really difficult to reach it within a few days. All right? So I will not take this trade. Now again, from experience, I can tell you immediately that it's too long. But if you're wondering, okay, is there a way I can calculate it again using ATR? Let's check out what's the average true range of this stock SB. So I'm going to click on indicator, select average true range again over here, and let's zoom out for the last 3 months. So recall for the average true range, I look at the last 3 months of the ATR and I roughly take the center somewhere about there. So you can see it's 15 cents, right? So for this stock, 1 ATR is 15 cents. What does it mean? It means that on average, this stock will move by 15 cents a day. That's the daily volatility. Okay. Now, what is 1.5 ATR? 1.5 ATR would be 15 cents times 1.5. Let me grab my calculator over here. 1.5 times 15 cents. That's 22 cents. All right, 22.5 cents, which means that I would like my 1 hour distance. So recall that your 1 hour should be between 1 ATR to 1.5 ATR, right? So in other words, my ideal 1 hour should be 15 cents to 22 cents. But in this case, how big is this confirmation candle? Now, if I click on this confirmation candle, okay, let me roughly click on this and drag it. I can see that the range of this candle from the top to the bottom is about 21 cents. Okay, so it's about 21 cents from here to here. All right, so yeah, it's about 1.5 ATR. That's right. But I would rather it be smaller, right, from experience. And I usually look at the candle in relation to the previous candles, right? So this is too big a candle for me to be comfortable buying and putting my stop loss over there, all right? So I'm going to skip this now. I'm going to show you more examples that come out that would be the ones would be ideal, right? It's not too big, it's not too small, right? So for SB, I'm going to give it a miss. So this is not a trade I would take, right? Let's go for the next one. Let's go for GATX, next trade up. All right, I like this one. Now, this is a perfect example of a setup where the confirmation candle is not too big and not too small. It's just nice, okay? Just nice. So in this case, you can see that the price is on the uptrend, right? Impulse, retracement, impulse, retracement, impulse, retracement. So it is bouncing off the 50 moving average very nicely, right? So that is a 2 candle reversal pattern. This is the reversal candle followed by a confirmation candle that makes a higher low and closes above the high of that reversal candle. So that is a confirmation candle. Okay, and it looks just nice. Now, let's look at the other criteria. Remember that for a bounce long, the MACD 50, 109 must be bullish. So, right, the MACD line is above the signal line, so that is valid. Now recall that MACD can be bearish, but it should not have crossed bearish more than 5 candles ago, right? But in this case, it is bullish, so that is valid, right? Now, recall also at the reversal candle, we want the stochastics to be oversold, below 30. And you can see that currently the stochastics is definitely below 30, it's at 29, so that is valid as well. All right, so this trade ticks all the boxes. It is a valid trade. I will take this trade. Okay, so where would I put my entry order, my stop loss order, and my target price? Okay, so recall that our entry price would be just above the high of this candle. So when I click on this candle, a box appears on the left. Can you see that box again? So on the box, it tells me that the high of the candle is 63.17. Okay, so my entry price would be roughly about, I can put it 3 cents or 5 cents above the high. Okay, so I can use 3 cents, so it'd be 63.17 plus 3 cents, it'd be $63.20. Okay, so 63. Just gonna estimate over here. Now again, because of this charting software, I can't put it exactly at 63.20, but it should be, okay, I'm going to get close at 63.19, right? So let me just write it down. So for my entry, E is for entry price. Okay, this is my entry price, all right? I'm going to enter over here. So my entry price would be always a buy stop limit order. Okay, so the stop price would be the entry price. So the entry price would be 63.20. Okay, So which means that the next day, if the price goes up as I anticipate to 63.20, it would activate this order to buy at the market price. But again, I do not want to buy too high, so I have to put a limit. Okay, so I can put my limit price at 63.23, for example. Okay, so I repeat, I put my stop order 3 cents above the high of this candle and the limit price 3 cents above the stop price. So this means, again, the next day, if the price goes up to 63.20, it would activate, it would buy the stock at the market price, but no higher than 63.23. That is the limit I'm willing to pay. Okay, so again, you can use 3 cents or you can use 5 cents, right? It's really up to you. Doesn't really make much of a difference. Now, where do I put my stop loss? Okay, so the stop loss will be placed below the low of the confirmation candle or below the reversal candle. Now, in this case, because they're pretty close, I would just rather put my stop loss below the reversal candle over here. Okay, so when I click on the reversal candle, the low is 61.14, which you can see in the box. So 61.14 minus 3 cents is 61.11. All right, so 61.11 would be there. Great. So that's my stop loss. So for my stop loss, it would be a sell stop order at 61.11. Right? So that means that after buying the stock, if it goes down and hits 61.11, I'll be sold at the market price and I will lose 1 hour in this trade. Okay, so 1 hour represents my risk per trade. Okay, so in this case, 1 hour, the 1 hour distance is 63.20 minus 61.11. So that's $2.09. Right? Let me just double check that for a while. Yeah, okay. So 1 hour is $2.09. Okay, so where do I put my target price? So if I put my target price 2.5 hour away, let's do a rough calculation. 1 hour is 2.09. So if you multiply that by 2.5 hour is $5.23. Right? So my target price would be 63.20, which is my entry price, plus 5.23. That would be $68.42. All right. So you place it as a bracket order, which you have learned under placing orders. So we have got our target price, our entry price, and our stop loss price. If it hits our stop loss, we lose 1 hour. If it hits our target price, we make 2.5 hour. Right? So that is how I'll place the order for this trade GATX. And that's a valid trade that I'll take. All right? Great. So let's move on. So far I've got one valid trade for today. Do I have any more valid trades? Okay. So next one is MAINT. So once again, you can see that this is stock that is bouncing off the 50 moving average, right? Impulse, retracement, impulse, retracement, impulse, retracement. All right. So yeah, that's a 2 candle reversal pattern. This is also a single candle reversal pattern. Now, there are a few reasons why I will not take this trade. First reason is you can see that the price is kind of like going sideways in a consolidation. Recall that I like bounces when the price goes down and bounces in a V-shaped fashion, right? I don't like the price to go down and then start to consolidate sideways. It has lost momentum. That's number one. Next, you can see that this candle is not a confirmation candle yet, right? Because it makes a higher low than the reversal candle, but it doesn't close above the high of the reversal candle. So that is not a valid bounce setup, right? So you could always wait for confirmation candle. You can keep it in view, KIV, wait for confirmation candle. But in this case, like I said, the prices are going sideways, so I'm not that interested in this stock, all right? So far we have got we've got one potential setup on 50 bounce long. Let's move on to 100 bounce long. All right, so we've got quite a number. We've got 1, 2, 3, 4, 5, 6, 7. That's bouncing off the 100 moving average. Let's take a look at them individually. Next, AER. Okay, so again, AER bouncing off the 50 moving average. But again, I find the confirmation candle is too big, right? Because if I buy here, if I enter there and my stop loss is over here, okay, my 1R would be really big. So to hit 2R is going to be really difficult, okay? So that's a trade I will not take. Plus, notice, okay, well, the rest is okay. So yeah, that's the main thing. Okay, next, VSH. How about this one? Bouncing off the 100 moving average. Again, the confirmation candle doesn't close above the high of the reversal candle. All right, it's right at the high, but it doesn't close above the high. So I'm not that interested. And also notice the MACD has just crossed bearish, right? Less than 5 candles go. 1, 2, 3. 4 candles ago it crossed bearish, so that invalidates the trade, right? Recall that for long bounce setups, the MACD must be bullish or cross bearish more than 5 candles ago, right? So let's skip that. Triple R next. Again, bouncing off the 100 moving average, but again, confirmation candles too long, right? If I buy over here, my stop loss is here, my 1R is a bit big, right? So yeah, I don't like that. I like small confirmation candles, small 1R. EME. How about this one? Again, I find the confirmation candles a bit big. Yeah. And I don't like stocks with a lot of gaps. Can you see a lot of gaps? Right? A lot of gaps. Yeah, I don't like stocks with a lot of gaps. With a lot of long upper shadows, I don't really fancy these, right? Because with long upper shadows, they tell you that bears tend to be in control. So through experience, you would be able to tell the good setups and the not so good setups, right? So again, you can screen for these setups yourself, or you can subscribe to our alert service where we'll send you alerts on great setups that we see every day if they come out, right? If they don't come out, we'll not take the setups. I'm very particular about quality over quantity. So sometimes if there are no good setups, I don't take any setups on a given day. So I may look at many charts looking for setups. If there's no setup, I will not take it, right? Okay, next one. How about this one? This one is bouncing off the 100 moving average, all right? And again, is this a confirmation candle? Yes, it makes a higher low and it closes just above the high of this candle. So, well, it's an okay setup, right? What I don't really like about this setup is notice that, yes, it is an overall uptrend, but you can see that this high, what's happening? That's right. You can see that there's a big counter trend over here, right? So overall, it's an uptrend, but you can see that there is a counter downtrend over here, right? Price making lower highs. So that doesn't give me that much confidence, right? I like to see, that kind of pattern going up, right? When I'm going long, right, I do not want to be going against a counter downtrend, okay, over here. Now recall one of the filters in a bounce setup is to draw a counter trend line, right? So to draw the counter trend line, we take the highest pivot, which we could take, this is a pivot point over here, that's the highest pivot, and we connect it to the next pivot, which would be here. This is the next pivot, right? It's a pivot point. So if we connect this line to this line, all right, connect this high pivot to this pivot, we have this counter trend line resistance, right? So if I were to buy above the high of this candle, I'm buying right at the resistance level. So that's not a good idea if I'm buying right at resistance, right? So again, through experience, you would be able to identify what makes a good quality setup. Now, also notice that this low is making a lower low than this low. All right. So recall that we want an uptrend wave pattern when this low makes a higher low than the previous low, right? Like an uptrend wave. This is a downtrend wave. But you could argue that this 100 moving average was tested before, all right? So that's one thing that is good, right? But like I said, I avoid this counter downtrend, all right? Okay, so I'm going to avoid this stock. Let's move on to next one, MANT. How about this one? Again, notice that it's moving sideways, right? It's moving sideways. And we looked at it just now, right? It appears now again, so we don't like that one. Okay, last one, CTT. Again, I don't like this because confirmation candle is too big, all right? And you can see it's making series of lower highs. Okay, so that doesn't give me much confidence if I'm going long and I expect to break that counter downtrend resistance, right? All right, so that's what I do, right? So I run through the 18, the 50, the 100 bounce long setups. We looked at many charts, and the only one which I would take would be that one we saw just now, which was GATX, right? So that's the only one I'll take, GATX, that's all, right? So again, if you take one trade a day, right, that's an average of 20 trades a month, right? That's pretty good, right? If you take 2 trades a day, that's 40 trades a month, and really that's more than enough. So again, quality over quantity, right? So those are all the long setups I can see. Now I can also look for short setups, right? Now, given that the market is bullish, I don't usually look for short setups, but for the purpose of learning, let's look at short setups. So I'm going to go to 18, short bounce with confirmation. Let's see what happens. All right, so nothing comes out. Next, 50 bounce with 50 short bounce with confirmation, and we've got 2 setups. Let's look at the first one. All right, what's happening? So the price is bouncing off the 50 moving average with a single candle reversal pattern, right? Now, would I take this trade? Let's take a look. Now, first of all, what are the criteria for a bounce short, right? So let's recall, single candle reversal pattern, yes. Now, is this a confirmation candle? No, because it makes a lower high, but it doesn't close below the low of this confirmation candle. Sorry, this confirmation candle doesn't close below the low of this reversal candle. So this is not a confirmation candle. So you may have to, KIV, keep in view, and wait to see if it confirms the next day. All right. Now, the MACD is bearish, so that's okay. So again, for short trades, we want MACD to be bearish, right? Stochastic should be overbought above 80, so that is valid as well. Again, there's no confirmation, but these 2 factors are valid. Now, what else don't I like about this? Okay, what I don't like about this is that it no longer has a downtrend wave pattern. All right. So recall that one of the filters is we want the swing high candle, the reversal candle that's bouncing off to make a lower high than the previous swing high. But this swing high is higher than this swing high. Okay, so this tells you that this downtrend wave may have been broken, right? Because this current swing high is making a higher high than the previous swing high. So the downtrend may have been broken over here. So I am not convinced that it's going down anymore, right? So the wave pattern is really important. And you can see that, again, this 50 moving average was not really tested to be strong before, okay? So I will not take this trade. CBMG, how about this one? Again, you can see the price is bouncing off the 50 moving average. This is a 2-candle reversal pattern. It's also a single candle reversal. Is this a confirmation candle? Yes, because it makes a lower high and it closes below the low of this reversal candle. So that is a confirmation candle. Stochastics is above 80. Check. This high is making a lower high than this high. So that checks as well. So everything looks great. Is there anything which doesn't validate the trade? Yes. Notice the MACD has just crossed bullish on the 20th of June. So 1, 2, 3. It just crossed bullish within 3 days. So that invalidates the trade. So recall that when I'm going short, I want the MACD to be bearish or not cross bullish more than 5 candles ago. Right? So it is important for you to run through this checklist. Does it meet all the criteria? And again, we only take trades that meet all the criteria. Follow the rules and you take high quality setups, and that's what leads to consistent profits. All right? So that concludes this part about screening for bounce trades.